Hello everyone, welcome back to the Monopolistic Investor. Hello everyone, welcome back to the Monopolistic Investor. And in this video, we'll go over the week ending 15th July 2025. We'll see what happened and what is my view on the current situation in equity markets. So a big disclaimer right here and now. This isn't financial advice. Remember, do your own research and consult with a professional financial advisor. On the 13th of July 2025, President Donald Trump proposed a tariff on Mexico and the EU. As we can see here, he threatened to impose a 30% tariff on imports from Mexico and the EU starting August 1. As you can see, this might be a bit of a escalation from Donald Trump towards the EU, which already had 20% tariffs imposed. And it could create some uncertainty in the markets. And also the fact that the EU wants to trade with the US isn't helping. Let's continue. The week ahead, is very busy. We have big companies like Netflix and Johnson & Johnson reporting their earnings. We also have Bank of America, the classic Warren Buffett style type of company. We also have Abbott Laboratories, the medical company. We have American Express, the company behind credit cards. We also have PepsiCo, the company that makes crisps and beverages. We also have BlackRock, the evil company. So we have a busy week. I have an exposure to two of the companies in this list. I have a bit of Netflix, and while not directly, but in our Nabut Projects company portfolio, we have Johnson & Johnson. So we will take a look at two of the companies that I'm going to focus on the most. First of all, ASML and Netflix. ASML will have its earnings on the 17th of July, and today is the 15th. So we still have 2 days left, but I will go over my investment reasoning behind ASML. Let's continue. First of all, Netflix earnings. What to expect? Well, I handpicked this article from Morningstar. So let's just take a look. What do we have here? Morningstar says that they will be watching subscriber gains and commentary on advertising outlook. Just one thing to mention here. Netflix isn't reporting the number of subscribers now. They aren't reporting that. Okay, so they aren't reporting their subscriber numbers, but the Morningstar analyst here says that they will be looking at the US and Canada sales growth rate. It should be very high based on last year's huge number of subscriber additions and recent price increases. Any commentary on advertising revenue will be important, since advertising is a nascent but critical driver of future revenue opportunity. Why is that? Well, it's because of the latest ad-supported tier on Netflix. Some people think that this isn't the best way for Netflix to grow. I personally think this is a great way. I might even see them putting out an ad-supported tier that is 100% free. Do you think that will happen? I personally think that in the future, Netflix might offer AI-generated movies on their more premium tiers. But we will see what will happen. Here you can see that their fair value estimate is around $750. They have a narrow mode rating and a high uncertainty. Well, we can debate with this. I think their growth is predictable because people want entertainment on demand. Right now, they see Netflix as a bit of an uncertain company and they don't like it. I think that Netflix isn't a buy at these levels. I will be watching their revenue growth. I will be looking at their sales and marketing expenses, as well as technology and development. Why revenue growth? Well, if a company is growing its top line fast, that could potentially mean more cash flow for us investors. Sales and marketing expenses, while I understand that more ads means potentially more revenue, I want as little expenses as possible, as I'm focused on maybe not only capital light businesses, but mostly. And if they want to be capital light, cut expenses somewhere. Of course, I understand that growth is also an issue. Technology and development. This is the part where they highlight how much of their cash is being put into reinvesting back into the business. That is a really important aspect of any investment. We want to make sure we get our money back, and we want to get it back at a high percentage. So I will look at how much of the revenue they are putting towards technology and development. We can take a look at their past earnings as an example. Here you can see their year-over-year growth. Maybe not very substantial in terms of revenues, and their net income increased, I think, by a good extent. Although, it's not something really special. I am waiting for them with their advertising expenses. As you can see here, sales and marketing, they increased only a little bit, but their technology and development, for example, increased. Their technology and development increased by $120 million on a year-over-year basis in this period. Is that high? We will see what will happen. I'm very positive on Netflix. I sincerely hope that they will benefit from AI and not be a loser. Let's also take a look at their cash flows that they had. Here you can see that their cash flows increased dramatically, and we are looking for that kind of growth. Over here, we have ASML earnings and what to expect. The analyst at this company says that ASML is reporting earnings on Wednesday 16th, before the Amsterdam market opens. Analysts expect EPS of 5.19 on revenue of 7.51 billion euros, with margins slightly down. Analysts are expecting good earnings. However, what they highlight here is that not everything is moving in the right direction. Gross margins are expected to dip from 54 to 51.9%, as the company continues to invest heavily in its next generation technology. That is a positive development from ASML, as we want to stay in it for the long term, not for the short term. So I'm not worried about some short-term price swings. Here we can see that the investors are divided. Average price target is sitting at 765 euros. I believe that the stock price of ASML is currently undervalued. I value them at least $1,000. Here is what they will look for. New machine shipments. Is ASML delivering on its promise to roll out more advanced EUV and high-NA tools? Are chip makers still placing large orders, or are they pulling back? Are newer machines helping offset rising costs? And what is the management going to say for the year? as their outlook. We won't take a look at the technical analysis, but what we can take away from this is that ASML is remaining one of Europe's most important tech companies, and without it, the most advanced chips on planet Earth just wouldn't be possible to be created. So I personally think that ASML is a buy at these price levels. If we take a look at their geography, this is one aspect which could be a bit concerning to some people. Here we can see the latest quarter, which happened. This is still before the earnings. Here you can see that China and Taiwan accounted for 27 and 16% of their region ship to location, respectively. You can see that they are very much dependent on Asia, Look, the US only makes up 16% of their total shipment location. And the tariffs aren't helping in this scenario. We, of course, know that by now Donald Trump wants to win over some other countries by doing those bold moves. But we have seen the frenzy. He can take it away the next day and nothing will happen. So we need to take a step back and just analyze the situation calmly. Let's continue. Here I can show you why I invest in ASML. First of all, almost every of their new machines costs upwards of $400 million. So that is tremendous cost. But that cost comes for a reason. Many people are willing to pay for such expensive machines because if they don't, they will stay behind. They have a dominance in a EUV lithography market with about 90%. Oh, sorry, what did I click here? This is some kind of a chatbot. I don't like it. Let's close it. They control around 90% of the advanced logic chip. Yes, I do. Why? Well, because China is around 20 years behind them. They have some catalysts for growth. For example, Taiwan Semiconductor Manufacturing 2 nanometer ramp up. They are their largest customer and they are aggressively expanding the capacity for those 2 nanometers, targeting volume production late 2025. We will see what will happen with that, but from the sound of it, I like it. AI GPU manufacturer capex surge. Well, many companies, including Amazon, Google and Meta, are all increasing their capex to $392 billion, with 44% allocated to AI-related projects. Do I think this is a big bubble? Well, it is possible because right now many companies are adding .ai to their name, similar to .com in the 2000s. But we will see what will happen. Here you can see that ASML has some reduced China dependency. We will see how will that be shown on the earnings. Because of Taiwan Semiconductor Manufacturing shift to US Arizona fabs, which will house 2 nanometer capacity. And Intel is using $100 billion to expand into the US. I would never invest in Intel, but this is good news for us ASML investors. Some people think that they are at a discount. I think that as well. And so, let's go back to the presentation. We also have Simply Wall Street commenting on this company. Why is it dominating the industry? Because of it producing the equipment. A company which wants to make those chips and want a high quality of that, well, guess what? They need to buy their instruments. And so you have other companies as well, but they are making for lower quality chips. And here you can see that those companies are basically dependent on ASML. And so what we can see here, that ASML has a monopolistic power, but it became a target for the People's Republic of China. The company presently receives a substantial portion of its revenues from China, but the export restrictions made things more complex. According to a finance expert, this push for self-reliance could eventually reduce China's dependency on ASML, but for now, its technological capabilities remain far behind, like something like 20 years. You can see this is similar to what I have shown you, but this is a bit earlier than what I showed you. I myself am an investor in ASML and I will keep being invested in them. So for now, I rate it as a buy. Let's see my portfolio, and in it you will see which of my companies are doing better than others. And I will give you a quick overview of them. I have 42 euro cents on my account. Adobe is my biggest loser at minus 88 euros 30 cents or 19.51 percentage points. And what I think of it? Well, I think it's a buy, although I don't want my whole portfolio to be dependent on one company. I understand that being focused is a good thing to do. Alphabet, on the other hand, is also a buy in my opinion, as they are still, in my opinion, undervalued. $300 for value is for me. I think that their diverse product offering, including Waymo, Google Cloud, and YouTube, which is really underappreciated by investors, I think provides a good investing opportunity, although do your own research, of course. Uber Technologies is a company that I invested in at around $70 per share. I see value in this company even after this skyrocketing. Although I might wait for them to dip a bit slightly, I made their fair value at $222, using a very conservative 4% revenue growth rate. I think that they are right on track. ASML, it's a company that I mentioned. They are a bit lumpy. They are a bit less unpredictable maybe in terms of their free cash flow, as it's a bit lumpy. But in terms of the revenue and the orders, well, they are predictable. Why? Well, because people will need to buy their machines sooner or later. They are the best in the world. Simple as that. Caterpillar, yes, I still don't know what to think of this company. I bought it out of silliness, I think, but so far it's been my biggest winner. I will keep holding this company and need to evaluate my position and investment thesis on it. Starbucks, I'm an investor in them, and when Brian Nickel came in, I was very excited. I bought before that. It was something like 2024, but it was, I think, here, yes. I bought it before that, and I was down. Then I went very high up. Right now it's on the lower side, but still I'm making up my losses. Booking is a company that I invested in as well. I'm not doing that much research on them, but I see that they are a very dominant position in Europe. Visa is another monopolistic company, which I really enjoy having, and it's been a very easy position. I don't care about the market movements, I just keep holding it, as I know that people still will pay with their Visa cards. Intuit, same story. Businesses have mission-critical software needs. Tax payment is a boring industry, but very profitable. Intuit is one of the companies profiting from that. Duolingo is a company for people who want to end their doom-scrolling addiction. Instead of doom-scrolling, you now have the opportunity to learn a new language or even maths. I think that they will put Pearson out of their job at schools. So, bye-bye chemistry books. Welcome Duolingo's new chemistry course. Probably it will come at some point. I've been up very high on this position, but I didn't sell as I don't know when to sell. I just keep holding them. I personally think they are a buy today, although I need to evaluate that. Microsoft, I don't want to buy them at these levels. They are very high to be buying them right now. I bought them in 2024. It was a mistake really, because I shouldn't have bought at these levels. Even though it's a high quality company, it's overvalued. Netflix, well, this is something I want to talk about. I personally own 0.04 Netflix shares. I have this tool called Market Vision, and I can use it to analyze any company in the world basically. Let me see if I have Netflix. Here you can add Netflix easily to your watch list. Search for it. Click on details. You can wait for the AI analysis, but I won't. I'm looking for the more stock data information. And even if we take a very conservative scenario for the discounted cash flow analysis, let's see what will happen to the valuation. Right now, it's at around $1,264. If we assume 4% revenue growth rate, well, we have this. If we assume a bit higher, well, we easily cross that mark. Is it a buy? Well, for me, it's a bit hard. Of course, I have anchoring bias because I bought at a lower price point and I won't be buying it at a better price. I know that management has been doing buybacks since, well, at around these levels, somewhere here in September. So now it's up 2 times. Is it still a buy? Well, I don't know. All I know is that it is a very good company, high quality. Let's continue with the analysis of my portfolio. We have Mondelez, a chocolate business, but not only, they also own crackers. Do I think they are a buy? Well, for those of you who like dividends, I think yes. I haven't been buying more of this company as I'm not seeing as much opportunity as in other companies. And with that being said, I want to say thank you all very much for watching this video. Here's a meme I made. Investors, before and after earnings. Investors before earnings, let me grab some popcorn. Investors after earnings, time to sell this company. Of course, this is just a joke. Remember not to take this as financial advice, but look at this. Stay monopolistic. Guys, remember, stay monopolistic. Goodbye.